It's been a great day so far. Markets have been very interesting and lots for us to talk about.
Yeah. A lot of things to talk about. Yeah, market is kind of trying to bleed down at the moment.
Yeah,
Yeah.
what are you seeing right now when you take a look at the charts?
I see weakness, to be honest. Like I still see like a failed breakout attempt and it's like a slow bleed. I think we might bleed all the way to like 60K and maybe like then we will have some relief rally. Um, yeah, I just see weakness for at the moment across the board. Everything just weak.
Yeah, and this is just simply coming down to macro weakness and then on-chain metrics looking pretty bad.
Yeah. Yeah, so on-chain looks quite like, not dead, but like not really positive. Coinbase, premium is negative, ETF outflows are massive, and you don't see a risk-on environment at all. Like people are very protective and very risk-off. They don't want to like touch anything at the moment. And anything could trigger like further de-risking, like any tweet from Trump, any geopolitical tension. So that's why people are just preparing for the worst.
Yeah, and we have got tension with Iran right now. It seems like things are going to kick off. I'm not sure what Polymarket is saying, but it seems pretty likely that things are going to get messy this week, and no one likes that. So yeah, do we have Polymarket odds on what's happening? Whether the market
I think we
believes that.
do. I think we do. We have like US striking Iran in 2026, like a bet. Okay, US strike. So by March 15, it's like 47% that US will strike Iran, which is pretty huge. By December 31, it's like 78%. That means it's very likely that US will strike Iran.
I mean, I wouldn't, if I had to make a bet, I'm not a betting man, but if I had to make a play, I would lean towards yes. Guess my odds are slightly above neutral too. But yeah, that's very tricky. No one likes that. But fundamentally, me and you, when you were talking earlier, what you just said, a lot of people aren't willing to touch the market. Are you willing to touch the market right now? Are you getting exposure? What's your stance?
Like I have a bunch of stables again. Like I have like some CLP positions in like assets that I like. If we go down, I will just average down. But for the most part, I am mostly in stables. But again, I'm willing to touch the market when there is like a lot of fear because like I have a very long-term horizon. And yeah, I think things get better. Over time, things always get better. Um, and you buy the fear and sell the greed, right? So you need to be able to buy the fear. So yeah, I'm more than willing to buy the fear, but again, like it looks like we might have like a final flash out before like bottoming out and like reverse the trend.
Yeah, perfect. Okay, awesome. I think our Discord members are going to start flying in a second. So that'll be good. Did you manage to get the post up?
Yeah. I did. Yeah.
Perfect. Yeah, no, it's very interesting. I have some CLP positions too. We spoke about buying spot. It puts people in an interesting dilemma when you do see things at attractive prices, but you know or you're confident the market's going to pull back. I always have that dichotomy of, am I trying to catch a falling knife? What's your stance on that?
Um, like if you are super fundamental investor, you would be buying BTC at like 75, like 65, 60, whatever. You just think like it's cheap. In 5, 10 years time, it's gonna hit like $1 million, and you buy regardless. So if you are fundamental and long-term investor, you can pretty much catch the knife and just do your stuff, do your full-time job, take care of kids, take care of your family and stuff like that. But again, I'm a full-time like in crypto, and I would rather like prefer like a having like a slightly better entries than the average Joe. So um that's why I wouldn't really catch the knife and wait until the new uptrend is established and then go aggressively. But again, I still have exposure to the market. I still have like a Bitcoin, like that I hold long term. but I had the risk, like I had like Solana exposure, Ethereum exposure. I had the risk it like probably like last week or 2 weeks ago because I saw market breaking down further. I was slightly wrong in terms of like a bottom, but nevertheless, even like accepting that you were wrong and then still selling, I'm still in a better position compared
Yeah.
to if I just held, just adamantly just holding through this all this stuff. So yeah, and Hyperliquid like held up my portfolio quite well. So that's why like it gave me like more stables as well. Like when it pumped, I just the risk a little bit over there as well. So I have like a nice stable coin to buy the dip. Like I don't know, in a month or two when we see like final flash out and yeah.
No, it's interesting. Do you know what your average entry on Bitcoin is over time?
Okay, so probably like 40 grand, something like
Okay.
that, because like I actually still run the DCA, like buying like $2 every day, and I don't even look
Okay.
at it. It's kind of a bad practice, but Binance allows you to kind of DCA BTC like every day, and I don't even look at it. So a year, like I just have like 2 grand there. So it should take me like, I don't know, 2, 3 years to run out of that money. But yeah, I still hold some of my BTC, um, and I'm planning to holding it for like long time,
That
like
makes
not
sense.
trading, just holding.
Yeah, I hear you on that. I have like a swing trade portfolio, which is almost a mirror of my spot portfolio because I don't swing anything that I wouldn't feel comfortable holding. But most of my holdings, I haven't really cashed out at any point. I do think with everything I'm seeing with a lot of our work that yourself, Tom, etc. are doing, it does make sense to look to de-risk. But I have seen a lot of people in the community express um, the hesitancy to de-risk because they already feel we're so far down. But what do you do? I get the idea of there's no point selling now because we're already so far down. We maybe echo this at points for certain assets, but if we feel confident in seeing a 60K Bitcoin or a 55K Bitcoin, the rest of the market will follow. What do you say to someone who is hesitant to de-risk right now because they believe we're already quite far down?
Like it depends what asset do you hold. For example, if you hold altcoins like Solana or Ethereum, they can go down another 30, 40, 50% despite being down like 70, 60% from highs. They can, if something is down like 60%, it can be down another 60%. That's why like I cut my losses like aggressively, even though like I don't know, like I wasn't that efficient in terms of market, but regardless, if something is down like 70%, it can go down another 70%. That's the thing. That's what I would say. And again, if you protect your gains and if you can buy the 70% drop, so that becomes like uh, you know, if it goes to the same exact price, so you like more than doubling your allocation. You know what I mean? For example, if you hold Solana at 80, for it to double, it will need to go to all the way to like 160. But if you the risk now and buy like at like 100, buy like at 50, for it to double, it only needs to go to like 100,
Yeah.
which is like pretty possible. And if it goes to like 150, you tripled, right? So kind of thing. Um, I'm incredibly bullish on crypto overall. It just okay, it just weakness is kind of like a obvious. And the good thing, I think the bear market is becoming a consensus because like 2, 3, maybe a month ago, bear market wasn't a consensus. And now it's starting to become a consensus, which is good. Then that means everything is being priced in. So I think it's the risk reward is like far better now than it was like a
Yeah.
month.
No, absolutely. We did also recently post on Instagram, and I'll echo it here. It's important to risk off at the right time because it's a lot harder to recoup once you're down. People think, okay, if my portfolio goes down 10%, all I need is a 10% increase to break even, but that's not the case, right? We covered the post recently. It's if you have $100,000 and your portfolio pulls back $20,000, so 20%, from going from 80K back to 100K, it's a lot more than 20%, right?
Yeah.
And I think it gets crazy. I think on Instagram we had some of these numbers, and if I just read them out to people very quickly, I think it's very interesting. It's Which I'm not even sure if the social is still up. I think we have it on Telegram. But yeah, like let me see if I can grab that metric. Do you have it top of mind? If something drops, let's say 90%, what kind of return you need? I think you need like a 400%
Yeah, yeah,
return
something
just to
like
break
that.
even.
Like, I don't
Yeah,
have the top of my head, but like I know, for example, if something drops like a 70%, the upside is like way higher than the 70% to the same price.
yeah, you need over 200%. If something drops 80%, you need a 4x just to break even on 80%. It's very important we learn to cut losses appropriately. And I would say I'm not sure how many people are watching who maybe are sitting there holding their spot positions, but I would strongly suggest everyone take a look at their positions and then ask themselves, do you have a solid stream of income or dry powder coming in? And if you don't, consider cutting positions, not because you don't believe in an asset anymore, but because you can re-enter, as we are quite confident this is a bear market, not in the same sense of like 2022, but a short-term bear market, probably a few more months of it. So if you can enter lower, that's a big opportunity, a big win on the table.
Yeah, yeah, yeah. Yeah, yeah, I agree. Um, yeah, I don't think we'll have like a another year of bear market. It will be just, as I said, probably there will be like one final flush. It's already like oversold, and we had like massive liquidations. Everyone is risk off, kind of thing. But again, you need. I think people are waiting. All these institutions and like bigger players are waiting for like a better prices. Like I could see technically bottoming out like around this area, but again, it won't happen in a V shape, right? So the price should tell us that we are bottoming. So like for example, like if price shows that okay, that was the bottom and starts this accumulation kind of thing, and starts reclaiming some key levels, then we would go like risk on again. So it doesn't have to be a flush down like by default, but regardless, you need to look at the price and tell and listen to what market is telling us. And yeah, I think we just have to brace ourselves for another like a month or two of like chop. And yeah, as I said, having some passive income or like active income, have good security
Mm.
practicing, and maybe like touch some grass and focus on um I don't know, family, friends for a while, or like just paying attention to the market because lots of things are in a discount and there is less noise. I'm already making some notes, and I shared like few notes on my X account, but I'm making like more notes on like, okay, what could run next, because market will always present new opportunities and new cycles will happen, greed will return, and things will run. And I think crypto just, amplifies everything, you know and then you can get like asymmetric returns here. So yeah.
Okay, no, absolutely. It's very, very interesting. I was discussing this with Tom a couple of days ago, and he gave me the line we're 4 months into a 7 month bear market. So we do expect some chop and maybe some pullback for the next couple of months. But I can't imagine that as the political uncertainty clears up and we see how, Whoosh comes in, how he starts doing his job, how things don't start to pick up. Would you agree that it really is just down to macro right now? I know we have a lot of the 4 year doomsayers, but I feel quite confident the 4 year cycle is not how we're operating right now. I look forward to picking up very soon, and then we can put those talks to bed. But do you have the same view as Tom? A few months left?
Yeah, in general. So the thing is, again, sometimes it happens. Like, sometimes I would say like, I had a thesis on Hyperliquid, but like the price action was going against me back in April. Like it was going like $12, $13, despite me being very bullish on it. And I was like, okay, maybe I'm wrong and my thesis is wrong because the price action is like telling me, is not confirming my thesis. But eventually it played out. Again, here as well, so far, like if you look at the pure price action wise, 4 year cycle seems to be intact because we topped in October. But if you look at the underlying fundamentals that drove 4 year cycle in the past, they are like nowhere to be found. Like the miner uh,
Yeah.
supply is so tiny compared to like things like ETFs and DATs and passive buyers from like, people who just DCA and believe in Bitcoin and crypto. So if you look at those things, it doesn't make sense to have a 4 year cycle. But regardless, so far, timeline wise, so far it's playing out, right? So I think it will break. But again, you can't, how do you say, like, I'm wrong until proven otherwise. And I think, it will be proved otherwise.
Yeah, no, I agree. I think ultimately, as you said, the factors that influence the 4 year cycle, they're not the things keeping the market down. It's other things. It's macro. I think it's a lot of the quantum FUD
Oh, yeah.
narrative also that's keeping things down. I wouldn't be surprised if this is artificial FUD for people who, are playing the 4 year cycle, to be honest. But
Yeah.
what do you make of that? Do you think it's overblown right now? As I can't seem to get away from it. Every
Yeah,
single
to be
week we
honest,
jump on
yeah,
and we say it's over, but people keep talking about it.
I've heard about this quantum threat way back in 2000, 2001. And, there was like, I knew about this risk. Like, I always had it at the back of my head. But like, generally, market didn't care about it for the last like 4 years. And market started caring about it when the prices started going down. I think the narrative just follows the price, and they're just trying to find the justification for why the market is down. And again, I'm not saying quantum risk isn't real, it is real, but I think it's something that gets solved. Like it's like I've looked at the potential propositions on how to solve it. It's already there. The problem is you need to coordinate. Bitcoin is decentralized and it might be very challenging to coordinate and agree on one proposed solution,
Mhm.
right? So, but I think if the market just, I don't know, doesn't perform because of this risk, everybody will have to, for the sake of their bags, agree on something. Okay, so we can't
Sure.
let this thing go to zero. So that's why I say quantum is I consider it as a discount. They call it quantum discount because you need to be buying while it's not solved, because when it's solved, it will be already late. Market will price in. And I think market fully priced in the quantum risk, to be honest. Like everybody, the risk, like, I don't know, institutions are talking about, like my professor at the university has started talking about this quantum thing. And I go
Uh,
like, okay, it's kind of priced in. But I think
yeah.
it will be solved. There are already proposals how to solve it, via soft forks. There are proposals to do a hard fork as well. I don't think hard fork will be eventually adopted, but other solutions, like one solution I like the most, we talked internally, and I talked repeatedly on like several live streams about the security budget of Bitcoin. This is like one of my biggest concerns. Like even like if you look at the quantum, like I would place like security budget risk like way higher. Um, I think the proposal was to use these publicly exposed wallets that are like lost, technically abandoned. Satoshi's wallets. Some people just lost their
Mhm.
keys and got access to it. So to use those quantum vulnerable addresses to
Mm.
subsidize the miners down the line, because after several halvings, it will become very difficult to subsidize miners and keep the security level of Bitcoin. So they're proposing, okay, at least let's use those wallets,
Yeah. Yeah.
quantum vulnerable wallets, to kind of slowly incentivize miners to keep securing the network, which would solve like two problems at the same time for me personally. But then you will have to kind of accept that Bitcoin is not immutable at the end of the day. So you kind of say, okay, if you have like your coin somewhere and you lose your coins, there's a precedent that someone
Mm.
can access your coins, like, even if it's was socially agreed on. But regardless, it's better than the whole network going to zero, in my opinion. Bitcoin
Yes, for
is like
sure.
still censorship resistant, credibly neutral network that isn't controlled by any nation state, which is huge value proposition. And I think you just need to you shouldn't let this thing die or go to zero just
Yeah,
because of
absolutely.
value signaling.
Yeah, well, look, we're at a point where I think over 8% of the Bitcoin supply is owned by some of these institutions and these big players. If we look at someone like Michael Saylor, who is going through an absolute shitstorm with the, social pressure of, hey, your MicroStrategy's finished or your play didn't work, and MicroStrategy's trading below its Bitcoin holdings value, which looks terrible. But he's certainly on the front foot, backing his thesis and holding the fort down. I think it will be very interesting who steps up to be that kind of captain of this initiative to solve this quantum threat problem. I think it's probably going to be the likes of a Sailor or the likes of a BlackRock who take lead and say, "Look, let's pull everything together to figure this out." I believe I had a conversation with you around 7 or 8 months ago, and you said that if you look at the actual ETF filings, it doesn't just say
Yeah.
expand on that. Tell the people about that.
Yeah, so essentially, so if you actually look at this like BlackRock's, Fidelity's, SEC filings, so they have to disclose the risk associated with the product, right? So there is a regulation. In their filings, they mention that if the hard fork happens, they not necessarily are going to support the one with the higher market cap, but rather the one that they choose. Right? Which is huge, which is very interesting. So they literally essentially saying, um, you know, fuck whatever market decides. We're gonna decide what is the Bitcoin network at the end of the day if hard
Hmm.
fork happens. So I think this is huge. That tells you that they are planning not they're not going to fold, and I think they want to exert some influence over the Bitcoin network, etc. And if you hold, for example, your Bitcoins in ETFs, that means if hard fork happens, so you're gonna end up with the BTC that is not chosen by the market, but rather chosen. Like you need to decide what is the Bitcoin network if the hard fork happens. Okay, whether it's this network is a Bitcoin or whether this network is a Bitcoin. Generally, market decides, and as a result, you can gauge that by like market cap, right? But even if the market decides one thing, BlackRock and Fidelity will tell you, no, you're not
Yeah.
holding Bitcoin from this network. You're holding Bitcoin from this network, which is like quite interesting.
Yeah, it is definitely. Do you have much knowledge of what went down with Bitcoin and Bitcoin Cash? I think a lot of people in the room have probably seen the green Bitcoin logo when they're scrolling on their Coinbase and stuff. So Bitcoin Cash was a hard fork of Bitcoin. A big part of the community were adamant that Bitcoin should become a common like payment method
Yeah.
more than anything. So go into detail on that. What actually went down and how does the hard fork actually work?
Um. Okay. So Bitcoin Cash. So the whole thing, right? So the Bitcoin Cash proponents were proponents of large blocks. Essentially, they were actually pointing out to the shortcomings of the Bitcoin, right? So it's very slow, it's not scalable, it can't become a P2P cash as it was envisioned by Satoshi Nakamoto in the original white paper, right? And they were like, okay, what you need to do is that you need to regularly increase the size of the blocks, which essentially would make it harder for miners. So it would concentrate miners because they will need to upgrade their software consistently because, they will need to more like, I don't know, like stronger software, like, faster to facilitate larger blocks, essentially. And if you continuously do that, you will end up with a very limited number of miners who would control the network,
Yeah.
right? Because you need to have like funds and you need to have like I don't know capital to actually upgrade your hardware on a consistent basis. But it's good for the performance and it can actually be the cash, P2P cash and more usable for the end user. But original like die-hard Bitcoiners, they were like, no, Bitcoin is a immutable network and you can't change it. Um, no matter what. That's the value proposition of Bitcoin because you can't change it no matter what. And you can be sure that it won't be changed no matter what you do. And eventually market decided that the OG Bitcoiners were right. Like, those proponents of like smaller blocks, and market rewarded immutability rather than like scalability. So that's what happens. And fork, it happens like anyone can make a fork. So I just copy and paste the Bitcoin code and change few parameters. So instead of, I don't know, having like, I don't know whether it was like 12 kilobytes or something like that. Instead of 12, I just write, I don't know, 48 or something like that. So I include like new parameters, new code, and we'll start running it and call it Bitcoin. If everyone else accepts it's Bitcoin, it becomes a Bitcoin. And the whole thing, one of the things, like I'm writing a paper as well, right? So one of the my main arguments was that even though you have this thing called code is law, and we review blockchains as like, immutable, code governed, you know, um, autonomous entities. At the end of the day, the governance of these platforms is like so social, like it's incredibly social. There is no code involved. It requires like tremendous social coordination, and it's almost like a politics kind of thing. So it's not really a autonomous governance at all when it comes to blockchain. So it's like socially governed thing, and you can see it in like a Bitcoin debate, like hard fork, and
Mm.
Ethereum hard fork back in the day when the DAO was hacked. So it was like kind of like a socially governed thing at the end of the day.
Yeah, no, that makes sense. I think with Bitcoin, ultimately, you've got a lot of smart players in the game. Um, BlackRock and some of these big funds, they're not getting involved in Bitcoin for charity. They're using this as a vehicle to make money, and they have a vested interest in making this thing work. And when the people who pretty much control the world have an incentive in something, you should probably pay attention. And someone like Michael Saylor, I know a lot of people think he's just some salesman trying to shill you Bitcoin. But I encourage people to go online and follow him and read some of his work and watch some of his long podcasts. The guy's a genius. So it's good to know you have some of these brilliant people um, on the bandwagon as such, because it's not really a bandwagon. They're here for the long term. It's more of a philosophical play than a trade. And I think for that reason, I feel very comfortable buying into Bitcoin, holding long term. But of course, you cannot ignore the real quantum threat. But that's a problem for future us, in a sense. I think with Bitcoin, that's pretty much the foundation. I know we said we're going to start this live stream and make it more about bear proofing against the market, but I actually like the idea of kind of going through the market as a whole and moving through some of the key assets. Let's talk Ethereum. I saw Peter Thiel. I know a lot of people don't like him. Like pull out completely. I think of Ethzilla,
Yeah,
the fund he
yeah,
was
yeah.
involved in. But then I've seen Mr. Lee buying huge amounts of Ethereum constantly.
Yeah.
What's going on with Ethereum right now? Vitalik recently with the L2 comment, which I was very happy about, to be honest. What do you make of Ethereum right now?
Yeah, so I think finally Vitalik realized this L2 scaling wasn't the roadmap that they had was wrong, essentially. I'm not like I think L2s make sense as a specialized app focused extensions of Ethereum, but they don't much make sense as a like a general purpose L2s. And Vitalik essentially admitted that. He said, okay, this is just wrong and we need to go back to scaling L1s. And to be fair, L1 is actually scaling. It's very cheap. It's like sub $1, like 10 cents to transact on Ethereum. It's no longer like paying like $100 to make a simple swap anymore, which is good. So I think what's happening with Ethereum is that it just it lacks the value capture at the moment. That's what I would say. And again, they've been, you need like a fresh narratives again. And remember, it took like 10 years for Amazon to actually to be profitable after 2001. So it took like um, 10 years for it to recover. So the same thing would probably happen with another ones. They are subsidizing growth. They are super
Mm.
cheap, but once they grow enough, I think they could start taxing the end users, the applications, and I think they can 10x or even like 50x their revenue. That's where value capture will come back. So people just don't see a value capture here. And Ethereum is already trades like a 200x, when you look at like PE ratio, which is like if you value it as a business, it doesn't make sense at all.
Yeah.
But if you value as a platform with monetary premium, it might make sense. But why would you value it that way when the rest of the market isn't valuing it that much? They're chasing like a revenue generating products at the moment. But eventually, I think Tom Lee's time horizon is like 5, 10 years. And I think he's right. And I think many people will just look back and see him as a genius, at the end of the day. But yeah, he's down massively, probably like top three losses in the history of investing, I think. Uh, 9 billion loss or something like that. Um, but yeah, I think it's just a matter of time. He's here for the long term.
Absolutely.
Yeah.
As are we. We're here for the long term too. And I think he'll go down as, I think this will be one of the best trades of all time when it's all said and done, personally. I think same thing with Sailor, with Bitcoin. I think I agree with you regarding some of these infrastructure layers, just using now as an opportunity to capture attention and audience. Very interesting. We typically do these live streams on our private Discord. And right now, we're on YouTube, we're on X, and we're getting people to view our content who've never seen us before. And it's interesting because if we do a good job and we provide a good service and people watch this, people get value, people enjoy, people appreciate, inevitably over time, that goodwill would translate into more members, more, inner circle members, etc. And it's a longer term play. We would make more money if we just gate kept all of this value to Cryptonary Pro, but instead we give it out there and it's a long term play. And I think that's what's happening with Ethereum and Solana. I think they will create massive audiences. They're going to be very affordable. The more efficient they become too, they're going to get to the point where things are still so seamless for the end user, where the end user doesn't mind paying, like you said, 10x the current fee. And at any point, you have all these incredible dApps being built on these platforms. There's no reason at any point they can't just up and change and say, right, guys, you want to continue operating on our platform? Here's this new fee you're going to start paying. And I don't think anyone's going to say no. So I think you're right. The play in this cycle is the application layer, but I wouldn't be surprised if next cycle the attention switches back. And I wouldn't even say to the infrastructure layer. I would just say Ethereum, Solana, and maybe one or two more. But yeah, let's see.
Yeah. Let's see. Yeah, I think I agree with you that they are very cheap. And I think they don't have a mod yet. You just need slightly like, I don't know, 2, 3 years of network effect to kick in. And then they can start charging the end user more without like losing an end user. They'll have to use this network. Look, like people still don't use Solana for like, I don't know, like a regular people are still using banks. And I think eventually Solana and Ethereum and all these networks will replace banks, or banks will be using these networks for like, settling transactions. That's when they can have like a real mod and they can easily 10x their revenue. And that's when it will kind of would make sense to hold these assets.
Yeah, absolutely. Well, I think it's a little bit of a Trojan horse effect. For years, everyone has said that DeFi will be replacing Wall Street, when the reality is everything's just been building for Wall Street to come and take over our rails, as we've seen. People are trading stocks on chain now. And I
Yeah.
think, yes, the banks will come in and eventually they'll be launching their stable coins on platforms like Ethereum and eventually Solana. I think it's just going to come down to when the time is right. I think you're seeing constant upgrades. I think with Ethereum in the last 12 months, we saw what? We saw Petra, we saw Fusaka, we saw, I think, Fire Dancer for Solana. So these products are improving. They're becoming more efficient, they're becoming faster, they're becoming cheaper, they're becoming more secure. And naturally, over the next couple of years, they become a lot more appealing for these big players to come on. We have the Alpenglow update, bro, happening in 2026. Tell us more about the Alpenglow update.
Okay, so it's a very interesting upgrade for Solana. Um, the key here is to change the consensus of Solana a little bit and make it way easier for validators to secure the network. I think some of the portion of the consensus process will be offloaded off chain, and that would make um, running a validator on Solana like way, way, way cheaper, which should improve the decentralization of the network because more nodes can join the network without like it will be more viable economically to join the network for like I don't know for additional nodes and um, and one of the things for Solana, they subsidize security heavily. So majority of the inflation that happens on Solana goes to validators so that they have incentives to keep securing the network. With Alpenglow, that incentive will go up like by default because the cost will come down, right? So they don't have to incentivize validators that much, and they can be much more comfortable with reducing the inflation of Solana, which is already in proposal. You know, they want to
Yeah.
increase this inflation rate by like twice. So the disinflation of Solana's token supply, like will double, which is good for the price and good for the scarcity narrative and stuff like that. So these two things might work like they're kind of complementary, and it could be good. It could be very good for Solana. And yeah, I'm pretty much looking at the this Alpingo upgrade and see which is like I think they're doing upgrades like every 6 months, and I
Yeah.
think they should keep innovating and giving like more and more and more features, um, because innovation should continue.
Yeah, absolutely. And I think it's one of those things everyone who's watching should pay attention. Do not mistake the poor price action for, a problem with the product. This is a vicious market. The real
Yeah,
value for an asset, it doesn't measure it. The protocols we have in crypto now are as good as ever. It's insane. Like Solana today at $70 is infinitely more interesting and valuable than Solana at $300. But people miss the forest for the trees with these things. Ethereum's so fast and secure now, and cheap, and people are sad. People were paying thousands to mint an NFT a couple of years ago when Ethereum's trading at $4,000, and today it's infinitely better. But
yeah,
people
yeah,
people miss this.
yeah. I agree, and I would also add that um, that these networks essentially like they should be valued as like cities, and these cities are constantly getting like evolving, and there were a lot of forced selling, so the price came down a lot, and but the majority of that was like forced liquidations. There was like bunch of market makers going bust, funds going bust, and that's why the probably fundamentals aren't reflected in price that much, even though we've been like for me the market fundamentally like historically is like it was never better compared to
Yeah.
this. You have like a functioning networks, no downturn. I don't remember when the last like significant hack happened in crypto because it's like battle tested. You have like a president of the USA saying like crypto is the future and stuff like that. You have like banks coming to crypto institutions, all this stuff, and fundamentally, it was never better, but we had a lot of forced selling in the last like 3, 4 months. And it
Mm.
was vicious, like we had largest liquidation in the history of crypto, which is insane. So again, just need to prepare for like a couple more months, maybe like 2, 3 months of a bear market. But again, bear markets historically are the best times to kind of load up and for the long term. And I think long term it will be all right. Like if I look in 10 years time, many is saying crypto is dead. It has no intrinsic value. It's just a big casino with like lots of gamblers and degenerates. But in fact, it's a massive, massive industry with like one of the best technological revolutions that happened to money. We are reinventing the money. We are reinventing how money operates on a global scale. Um, and just the mere fact that I can send like $100 to anyone, to any part in the world, um, in a click, and it would take like 0.001 cent, and it would take like 5 seconds, which is insane to me because it takes like 2 3 days to go to wire money to somewhere like from the USA to, I don't know, to Europe. um
Yeah, it's incredible. It's incredible. What I will say is, this might be a bit controversial, but everyone says that Bitcoin is the killer products in crypto, and some people say no, it's Ethereum with smart contracts. I think the number one product in all of crypto are stablecoins. It's absolutely incredible. I think they are, for me, probably the most useful thing within crypto. Bitcoin's incredible, but if Bitcoin disappeared today, it would be terrible from like a narrative perspective and an industry perspective. But I think we could all live without Bitcoin, to be quite honest. Ethereum, Solana, they're incredible and they have real utility, but you always have an alternative. There can always be a better, there's always another layer one, right? Ethereum has its place, Solana has its place, but you don't need both. Whereas imagine what would happen to us if stable coins were just removed, right? And they just didn't exist anymore.
uh,
Would we be trading XRP? Like what would we be doing? I don't know. I think it's huge, but I do also think that as these platforms like Ethereum and Solana improve, and as stablecoins become such a no-brainer, as much as we are talking about innovation and we're saying, look, the price is not, the innovation is not being reflected in the price, I do think you can get to the point sometimes where something becomes so good and so um, underappreciated because it's considered the norm, where it's no longer valued in the same way. It's like we can all sit there and talk about how incredible Steve Jobs is for the iPhone, but not many people know like who made the regular telephone. I know you probably do, I do, but it's just you can't appreciate it anymore. Like who invented the wheel? I don't know, right? Who invented the lamppost? Like, I don't know. And with Ethereum and some of these things, they're so good, and Solana and even stablecoins, where you almost won't be able to appreciate just how good they are, and their price won't necessarily reflect the incredible value they've bestowed upon the world. You know what I mean?
yeah, that's a very interesting thought, to be honest. Yeah, yeah. Very good.
Yeah,
Very
yeah.
good. Yeah, but over time markets are efficient. It might not be the price might not reflect in the short term, but like if you look at 5 10 year time horizon, price always catches up.
Mm, I agree. I agree. Especially when, like you said, they can try and do something where they perhaps increase costs for the developers and the people running the show. For example, with us, like we're a business, we run a few different platforms. If some of these, like we're using a platform called Riverside right now, and the reality is it's made it possible for us to host on so many different channels at the same time. If Riverside come to us and they wanted a 3x our payment plan, we would pay it, but it's not going to impact the end user. We don't really have a choice. You could argue eventually we would have to increase prices, etc. But like you said, if platforms like Ethereum and Solana and these other key infrastructure players, they choose to increase the costs for the producer, not the consumer, it wouldn't push away consumers, and I don't think it would de-incentivize producers to the point where they decide to
Yeah.
move away, especially if there's no other alternative. But that's infrastructure layer, bro. I know you're passionate about the application layer, in particular. We're talking about Hyperliquid right now. That's our number one pick when it comes to utility tokens. I know there's people here who love the meme coins, but keep that for C Pro and Twitter. But talk to me about the application layer. We're seeing these revenue generating protocols like Hyperliquid really outperform. I know we're not necessarily fans of Pump and Pump Fun as a whole, but they have a place and they've managed to, make some good money with what they're doing. Talk to us about the application layer because I think that's the one that's going to outperform the most in 2026.
Yeah, yeah, yeah. I think the application layer already application layer platforms, they already figured out how to capture value. It's simple, right? They generate revenue and they charge the end user and use that revenue to buy back their tokens, which makes it attractive for investors because you can value it way easier compared to like things like, infrastructure layer platforms like Solana or Ethereum, where the value capture isn't that clear and you have to guess and, do some valuations based on analogy. So I think market just showing us that the application layers will capture more value simply by looking at how Hyperliquid performed. It's probably gem of the cycle. And again, like if you really understand, sometimes I have like a back and forth with Tom, and sometimes I have back and forth with like community members who say, okay, hype is going to like $10 based on the chart. Right? And I go like, okay, just think about it. Like at what valuation should it trade for it to go like to $10? It would be like 1 billion or 2 billion. And it generates and it buybacks $1 billion of its own token in a year. That would be incredibly hard to push it to that level unless something catastrophic happens to Hyperliquid. Okay, so it becomes easier and way, how do I say, you can hold it easier compared to things like Solana, Ethereum, which are like purely market and risk on and risk off barometers. But if you know that if you sell the tokens and your tokens will be bought back by the assistance fund or whatever, by the protocol itself, you go like, okay, should I be selling the token? So I think many application layers are adopting the same strategy
Mm.
like Hyperliquid. We've seen it with Pump Fund. I'm making notes like, it might be a bit early, but they buybacks are incredible, even despite the bear market, like massive strength there. And it's not reflected in the price, to be honest.
Yeah.
And there are like other platforms like Aave, BlackRock bought Uniswap, like Uni token.
Yes. Yes.
Yeah. So it's time probably to pay attention to application layers because like infrastructure layers, they're subsidizing growth. And because they're subsidizing growth, application layers might be in a very good position, in terms of like their margins. Their
Yeah.
margins could be like huge. But over time it will compress because I think infrastructure layer will start taxing the application over time. And their margin will shrink so that the whole thing is sustainable in the long term. But for now, since they're growing, like I think the attention will be where, margins are huge. So that's how I'm looking at it. And I think it's easier to spin off the narrative as well. For example, for Ethereum and Solana, it's not a fresh narrative. Okay. But for example, if something new app comes along, it will become a new thing. And, on top of the revenue and buybacks, there will be speculation as well. And it will become like an easier hold. I would say I'm just looking, just making notes. There is Morpho, there is Pump Fund, there is a Hyperliquid and Aave. Um, so there is Polymarket, incredibly successful app, but it doesn't have a token. Um, So yeah, I think that's why I'm just thinking that probably we need to be looking at these apps
Yeah.
and yeah.
I agree completely. I have a question for you. I use so many cool dApps all over crypto. I use Orca for concentrated liquidity. I use, Jupiter and Radium when it comes to swapping. I like Uniswap. I think it's great. I stake on Aave. Um, what the hell is wrong with these protocols? Jupiter is so valuable as a product, and I think everyone would get thrown off if it disappeared tomorrow because we're familiar with it. Why is its token just a pile of crap, to be quite franco, bro? Like, what? Why did they launch it the way they did? Why are the tokenomics the way they are? And can they just decide overnight to switch up their model? Or are they trapped?
No, they can switch their model. Like they have buybacks, but it didn't um, make much difference because the amount of buyback was so tiny relative to market cap. And what made me laugh was that a couple months ago there was this debate whether buybacks work or not. And they go like, okay, we have empirical evidence. We've been doing buybacks for the last like I don't know 5 6 months, and the price, market. It's clear that market doesn't care about buybacks. But in fact, if you look at the numbers, the total that was bought back was like, I don't know, 70 million, which is like tiny compared to the FTV. And I go like,
Mm.
look, this is not a real buyback. If you increase the buybacks, increase your revenue, then you will see the impact on it, because at the end of the day, it's just a supply and demand. And at the time, supply was like way bigger than demand, because you have like team members unlocks. They every year they do airdrops and stuff like that. So that's why for them buybacks didn't work well, because of how it was executed. So execution is important, and the vision for the future is important. So people need to see, okay, what's next? Okay, so if you have just buyback, you will become a something called like you will become commoditized if you don't have a
Mm.
path forward to how to increase the revenue. You always need to, because everyone is like forward looking, you need to show the market that in the future, um, you can increase the buybacks, right? So the way the Hyperliquid is doing is like you have like bunch of integrations, you have like a outcome based features coming, you have portfolio margin. So all of these things should increase the volumes and open interest and buybacks in the future. Even though it's not there yet, people will start speculating and expecting it to happen in the future. So you need a good story on top of a buyback. So for Jupiter, what's the next story? Right. So they integrated bunch of like they launched a mobile app. Maybe it didn't affect the revenue that much. They launched lending, which was good, but again, they don't have a mod there because you have Camino on Solana, well established and used well. And now I struggle to see, okay, what's next? They essentially integrated everything. They even integrated culture, like prediction markets.
Yeah.
So, um, yeah, they have a revenue, but you need to have a founder or team member who can say, hey, this is just the beginning, and down the line, we're going to be building this and that, the
It's
thing.
marketing. It's
Yeah,
marketing and branding.
the Elon Musk says, like, okay, we'll be, sending humans to Mars by 2029. It won't
Yeah.
happen likely, but people will be expecting it, and that would keep people excited about it. So that's needed as well.
Mm.
So I think that's why Jupiter is down so bad, because you don't have a charismatic leader who can communicate the future of the platform.
Yeah. Okay, well, I've got a fun exercise actually. I'll put you on the spot. You're the head of research. Jupe is one of our top picks at C Pro. Tell me why, as a founder, we should keep it, or why would we not cut it based off what you said?
It's still like a foundational piece of Solana, I would say. Like again, you have a cryptocurrency picks where we have like solid assets to hold long term, and we also have a barbell portfolio where we are much more pickier with our portfolios. And on top of that, we have like
Mm.
market direction, market update reports where we say risk on and risk off. Yeah, it's down. It's a great platform to be. It will be here like long term, but again, like my general rule of thumb is to cut it if it underperforms BTC. So based on this logic, we probably should remove it. But the problem is it's already super down, and essentially, and we are in the depth of the bear market. So I think the risk reward, if you already have Jupe, I think risk reward here would be holding. But again, like once you see the bounce and the bull market and the activity returns, I think that would be better exit rather than right now if you already hold it. This token, this asset would probably be here in like in 5 years time, to be honest. So it's a solid asset, but again, we have a barbell portfolio for like more tailored picks, and we have something called the inner circle for like even more tailored pick for the portfolio. So
Application's open, but it's closed. So not right
yeah,
now, guys. But
yeah, yeah, yeah.
it's true. I agree with you, bro. Is there any DEX that is doing a good job from a tokenomics perspective in that sense. Could Jupiter, like we just said, no? I would say, hey, look, you saw what happened with Uniswap, so maybe put some sell orders in on your Jupe and just cross fingers and maybe BlackRock buy a bunch overnight. Who knows? But is anyone doing the DEX game properly when it comes to monetizing and making some good money?
Um, well, you could consider Hyperliquid a DEX. Pump Fund is actually doing well because
Yeah,
many
but I view
money.
them as their own thing. I view like as much as they do all of these different things. I was talking more. You got the dupes, the rays, the uni swaps, the cow swaps, because they're more. Pump Fund has its meat like launch pad. Hyperliquid's a beast. It has everything but
Yeah,
perps.
no DEX. Like essentially, like no DEX is doing well, and Jupiter evolved from just being a DEX to being like a you know platform that hosts like bunch of products. Like Jupiter has perps, Jupiter has like lending, Jupiter has like prediction markets. Um, it has a launchpad as well, similar to Pump Fund.
Mm.
So, like, if you view it as a DEX, like pure DEXs, none of the DEXs are doing well because,
You want to be cheap, right? You don't want to be expensive, so you
yeah, yeah,
increase your
yeah.
prices.
So
No
you
one's
need
going to
news
use you.
stories for that, and you need revenue. And again, you need VCs out, and you need team members to be out a little bit. And then, if you have like a proper narrative and the revenue and buybacks, I think they can still do well. But right now, I don't see any DEX doing well. Um, that's why, like, I think when I say application layer, I don't mean DEXs though.
Yeah,
I
I know
mean
what you mean. I know what you mean.
more like innovative stuff that can capture a lot of value and mind share. Uh,
Yeah.
and
What
maybe
are
we'll see.
products? What are products that you think could be developed and built that would be phenomenal? Like I gotta give it up to them. If someone went back 5 years ago and said, "Oh, you're gonna have an app called Pump Fund where, anyone can launch a token and it's gonna ride the coattails of the meme coin super cycle and people are gonna live stream themselves, threatening to commit suicide if you don't buy
Yeah.
their token." I would have never pictured it. If you told me there was a platform that's gonna come along and let you fund vaults of different traders and you can trade any asset in the world pretty much, and I wouldn't believe it. And then you look at the prediction markets. I couldn't picture it 2 years ago. I knew information was something everyone wanted to bet on, but I didn't see it actually happening. So, what are cool products that, in theory, could be built in crypto that you're like, that's a no-brainer?
Okay. I think something that brings crypto to not to TradFi, to normie users would be great. Like things like that would be integrated directly to your like a bank account thing, and they charge you for like, for this. I think that could be like a next wave of adoption can come from. Another, like we have prediction markets already, which is quite interesting. Um, what else? What else? I think we have stablecoins. These stablecoins are not they're not well scalable though. I'm not sure to be honest. They're like, I have some few ideas, like, integrating this, the whole crypto ecosystem into like everyone's mobile phones via banks. That could be a very
Mhm.
huge application. And again, on a broader way, like I would say, something that could replace like intermediate banks in supply chain would be pretty huge. Live streams are very interesting. Maybe like something like a gaming live streams and you know um, an application that would connect your, I don't know, your Camino to like YouTube or something like that. So they could be a very interesting thing. I have no idea what comes next, but I'm
Yeah.
just watching, and maybe someone can build
Hmm.
something interesting and we can catch it.
Yeah, who knows? Maybe someone watching this has the next $100 billion idea. I guess
Yeah,
we'll have
there
to
could
wait
be
and see.
AI agents can come. That could be a very
That's a
huge
big one.
application. Yeah, some AI agents, some, I don't know, robots. Like for me, IoT, it was a thing a couple of years ago, Internet of Thing.
Yes.
Uh, crypto is very good is very good at being programmable, right? And traditional like banks are not that good. So the machines and IoT stuff, your refrigerator is probably gonna be using crypto rather than your bank account because
Yeah.
you can verify the code, verify the contract. So all this kind of thing could be a big next thing.
Yeah.
Uh, yeah, let's see.
It's interesting. I think if I circle back and think about NFTs, I think in some ways it's a bit of a shame what they became because the idea of like, look, you can like non-fungible tokens, brilliant idea when it comes to the idea of like authentication, adding a like almost like just a log of like ownership in a sense. Like I always pictured like years ago, like, okay, you go to like a sports venue, it's an NFT, right? You want to sell your house, tokenize your house and put it on OpenSea. There were loads of these types of things, but it just became a battle of the JPEGs. Same thing kind of like RWAs in the sense people, we see like people trading stocks online now, but in crypto. But yeah, I don't know. I think I'm curious if NFTs will ever make a comeback in a practical
I think
sense.
they will. I think they
You
will.
think?
I think they have value, and the idea was very good, to be honest. Like, everyone at the university should get their degree in
I
the form
agree.
of NFTs. You will never lose it. And any other university, or for example, we are employing, right? We can verify whether your diploma is real or not by checking on chain.
Yeah.
It would be way more easier, to be honest, for universities, for graduate school and stuff like that. And that would be, and there is a lot of fraud in actually in like faking your degree and stuff like that at like degree institutions.
Yeah.
So
I agree. I agree. Same with
that
like
should have worked. I don't know, like market just didn't want it.
yeah, no, you see like same thing with collectibles. Like I saw Logan Paul bought a Pokemon card for like $5 million, and I think a few days ago sold it for $16 million. And you're like, with some of these collectibles, now in of itself, I think is very different having a physical collectible of a franchise that's been around for 30 years and touched the lives of hundreds of millions of people. I understand why it's valuable, but the authenticity side of things, I think is a massive value. There's a company called PSA, and they basically do authentications and like grading checks on different collectibles, like comic books, trading cards, and all these different types of things. And the value appreciation when you can authentify or authenticate something and like quality assure something, it just increases value exponentially. And I think NFTs would be the most logical, fair way to do these things. But I want to move on to another subject now. Who would have thought we touched on NFTs in today's stream? This was a survive the bear market. I brought meme coins, man. Everyone, look, we talked about infrastructure layer, we talked about application layer. Now, look, this is crypto Twitter too. Everyone wants to talk about meme coins. A lot of people say meme coins are dead. We obviously, at Cryptonary, don't believe that's the case. Dormant, not dead. That's what we said in our 2026 outlook. We're obviously bullish on a few different meme coins. I think when you look across different market caps, there's one in particular that's a small cap that we're part of, what we like a lot, Aura. We obviously always spoke very highly of stuff like SPX. When you look at the big, like the majors, you've got like SHIB, Pepe, Doge. We saw rumblings of the Doge ETF and things happening there. When do you think meme coins make a comeback? If you had to put a timeline on it,
uh if I have to put a timeline, maybe like mid to end of the year, I would say. Things need to pick up. Like, you can't have a risk on environment where Solana is like at 80 at $80. So probably it should be like above like 150 to 100 to have this animal spirit. And there should be like wealth generation happening. And I think meme coins, they will always be there. Again, the reason why I'm looking at Pump Fun is that even when meme coins are kind of dead, they call it dead, even though they're dormant, Pump Fun is still generating 1.3 or $1.4 million a day. Okay, that's huge. Uh, that means people are still like, gambling on meme coins. And I actually recently had a call with like high net worth individual in our like inner circle. And the client was saying, oh, I like gambling like 20, 30, $200 randomly on a pump fund meme coins. And I go like, okay. So it's not like huge for the client. It just like like an entertainment that you would pay for, to watch a movie or something like that. Who cares if you lose? Just for entertainment purposes. And I think memes just provide that, and I think that's why they will still be relevant.
Yeah.
And I'm actually looking at all the people who like kind of sold the top. I'm just saying they are looking for the next Pepe already, like when the market bottoms. And I go like, okay, so probably memes will still be in the conversation.
Absolutely, 100%. There's no other sector, I would say within crypto, but within finance, that has realistic 100x potential that happens time and time and time again. Once fluke, twice I'll question it, three times, okay, you're onto something, and four times in a row, like with Cryptonary, with our meme picks, there's an art to this, and it's a no-brainer. We just need the market to risk on. There are lots of great memes out there that tick all the fundamental boxes. And there are fundamentals. I think people struggle to come to terms that there can be fundamentals behind a meme coin. When it comes to holders, distribution, has it survived drawdowns, community sentiment, the works. I think there's a lot of things out there that you can use to measure a good meme. I think it's interesting to think about memes by ecosystems too. I do think in the next cycle or two, you'll see some killer meme coins on the Ethereum chain. I just think objectively it will happen. Solana has an ecosystem, Ethereum does too. But I think a lot of Sol meme coins will run, especially because we've seen so much BS come up over the last like year or two since the pump fund kind of run. Where now like I do kind of subscribe to the thesis of like community over hype, etc. However, where meme coins are interesting is once again, if I zoom back to 2020, 2021 with the NFT space, I can't remember the name of the protocol. I think it was called Chili or Chili's. And basically, it was around, they spoke about fan tokens. Anyone or any person, any company could go and launch a token to represent a fan group. And I remember thinking, like, I used to watch football during that period a little bit. I'm like, wow, imagine my Man United season ticket was an NFT, and imagine I could buy into the Man United like fan token, etc. And I kind of view meme coins as the realization of those fan tokens. So it'd be quite interesting if we see more of existing communities in an organic way launching their own type of meme coin. Right now, obviously, when you have a Kabali type token, it's you can't do that. Like inorganic meme coins don't work, and they eventually people get rugged. But real communities launching a fair launch is difficult. A meme coin to represent it. I think that's almost like something that works in reverse. It could work quite well, but yeah, meme coins are interesting. I get a lot of people every day message and ask if they're dead or has Scriptnary changed its thesis. And I just want to say, like, guys, you can't sit here screaming at the top of your lungs, buy this meme coin when the market says risk off. But very bullish on meme coins. Yeah, it's good. It's good. And meme coins are great. I think the only other thing I wanted to touch on a little bit of, bro, is I want to go over Circle again. I want to go over Circle, the stock. I want to touch on stocks moving on chain, and I want you to share again the thesis behind Circle. It's probably down like everything else, but I really do appreciate your thesis on it. So let's talk about that a little bit.
Yeah, okay, I'm just looking at the chart right now. So it's down, what, like 14% since we covered it. I think it's had a very good recovery in the last like a week or two. So the original thesis is that it's a good hedge, very smart hedge against change in monetary policy by the US. So because Circle is a stablecoin issuer, so its revenue directly correlated to interest rates. So high interest rates, bigger the revenue, more positive for the stock itself, right? And lower the interest rates, kind of bad for the revenue. But the thing is, stablecoins has been growing for the last like 4 or 5 years, like, exponentially. And I think with Genius Act and friend the US administration, you will see stablecoin supply in general in the market continue to grow regardless of the interest rates. Right? So you can have like revenue compression if the rates go down, but because the supply of stablecoins will grow over time, so they can keep the revenue neutral. And that would be very bullish for the Bitcoin, but it could be very neutral to your Circle stock, right? But if we say the interest rates go higher over the coming years, let's say that would be very bearish for the Bitcoin. But because you have like Circle or like, the stablecoin issue in your portfolio, many will kind of de-risk to stablecoins, which will increase the supply of stablecoins. And because you're earning more yield because of the high interest rates, your revenue will again increase, which is like kind of a flywheel for the stock's price. So that would be bearish for the overall portfolio, but bullish for your like stablecoin like Circle part, which should balance it out. But in the long term, because the stablecoin supplies kind of projected to grow like exponentially, because of the overall market will grow, and the Bitcoin's price is going to grow as well because the money supply kind of grows all the time. Um, your final destination, the direction of both of these assets are the same, but in the short term, they are like negatively correlated based on interest rates, which
Yeah.
should be a good hedge in the short term, right? And this is called modern portfolio theory, kind of um, popularized by Ray Dalio. So that's the whole thesis behind the Circle stock.
Yeah. No, it's a great thesis. It's one of my favorites that we shared as a company. My only issue with it is the market does not care about how logical an idea or a play is. It's all speculation. And in the long term, I think having a fundamentally sound thesis pays off. But I do think short term, I had people joke around with this and say Circle's down 3% since we last covered it on stream, when everything else is down too. But I do think long term, the thesis plays out. But I think short term is one of those things with all assets, crypto and stocks. The idea of value investing is kind of out the picture, especially when you think about indexes. Because if something gets into an index, it's getting capital with almost no justification, right? I think that's why the stock market stayed propped up a lot more than crypto. It's like people have been site-opt into just DCAing part of their paycheck into the stock
Yeah.
market. It's artificial. I think it'll be interesting when you have ETFs now. I guess people now are doing the same with Bitcoin. A quick note as well, actually, abroad. I just want to mention, I was thinking about this a couple of days ago. I was working on a portfolio construction YouTube video, and I think something that a lot of people need to consider, especially there's a lot of people in our community. People are holding bags from like 2, 3 years ago. And when I've spoken to them about why don't you just cut your positions, like why are you still holding Rune or something, for example? We like Rune, we had a history with Rune, but why not cut it? People are like, well, it's down, I'll cut when it goes back up. But this isn't the stock market. This is not the S&P 500 where things naturally over time should recover. And a lot of these tokens will never recover. They're dead. They're dinosaurs, they're fossils, and they're not coming back. And I think since we did start with the idea of making this a bear market survival guide, uh, look, if you're holding coins from 2021 or 2017, 99% of them are never going to make a recovery. And I think you need to take a hard look at your portfolio and ask yourself, if I was not holding this token, would I go and buy at today's price? And if the answer is no, cut the position. That's my take anyway. Now, we can go case by case, and maybe you want to jump into the C Pro community and ask about particular assets, and we'll give you our take. But a lot of these tokens aren't coming back. And if you're not sitting on much capital and you need stable coins, just cut the positions, right? It takes more of a man to cut a losing position than it does to hold on to something that's never going to rebound. So if you're not sitting on much cash, consider taking a look at your portfolio and cutting the crap. But yeah, what do you think, bro? You agree with me, or should we just sit there and wait for BlackRock to buy our token and sell into it like Uniswap?
Nah, I think um, it's important to cut losses quickly, I think. And to be honest, it's happened to me as well. Like while you're holding, you will find reasons to hold it. Like you will find justification for your thesis no matter what. A good exercise is trying to sell like 5, 10% or 15% of whatever you're holding and really try to think and see how you feel about it. Sometimes it becomes much more clear that you are wrong once you sell, and it becomes way more easier to sell it further. Right. So you might be just psyoping yourself by just holding and finding all the reason why you should this thing or why your thesis should play out. So it's always a good idea. Like if you're struggling to sell, try selling like 10, 15% and give yourself time to really think whether your thesis holds. Right. Once you sell, you more often than not, you will find that you actually don't really have much conviction in your own thesis because you just simply were wrong. And yeah, you should cut your losses. I don't know, like we wrote a report saying that you should freaking get out of Thochen and Rune because they were going insolvent. I'm surprised some people still hold to Rune. I was a big fan of Thochen and Rune. I held like a very huge position in Rune, like back in the day. But again, it's important to move on and cut losses and really, and again, like we wrote the report saying sell all your ruin like 2 3 years ago. So sell your ruin, it's not coming back.
Yeah, no, it's interesting. We have obviously our pro community. People are sending me messages actively on two different subjects in regards to the 4 year cycle. Look, there's a difference of opinion, right? I'm sure there's a lot of people on X right now who believe in the 4 year cycle. I personally think it's a no-brainer that it's just not a thing anymore. Even if we get a 4 year cycle, it doesn't mean it was driven by the same fundamentals that people are saying cause the 4 year cycle. So let's see who's right. And then people talking about what we just said about cutting positions. Look, if it's an asset that you believe in, there's many that we at Cryptonary believe in. I'm not talking about cutting those assets. I'm talking about tokens from 2017 that you're holding like a couple $100 worth.
Exactly.
It's like XRP. I'm sure the XRP army won't be happy with that, but XRP, like I spoke to a guy, bro. He applied for an inner circle position, and this guy was sitting on around $800,000. And he was a clever guy, entrepreneur in different areas. And he told me a few things, and it was alarming. So we definitely need to work with him and help him. Didn't have custody of his own assets. It was held in a cousin's exchange account. Never heard of a ledger. Held a couple $100,000 worth of XRP that he bought back in like 2017, 2018. And it was a Cryptonary subscriber for nearly 5 years, but never heard about any of the meme coins and didn't know who we are. So there's a lot of people who are just not active in the market. And I think these are the people who need to hear, like, guys, that's what I mean by cutting. I'm not talking about your incredible hype and aura positions. I'm talking about your XRP. Um, so yeah, that's what I was referring to. And for your cycle, let's see. Any more comments abroad? Anything to share with the people regarding the bear market? I think CLPs are a phenomenal opportunity that we spoke about. We've covered them quite a bit. We did a YouTube video that's doing pretty well. But concentrated liquidity, for those who haven't heard of it, give us a short 120-second breakdown.
Concentrated liquidity, well, it allows you to profit off volatility and chop in the market. So you take the other side of the traders. So the more traders like trade and create volatility, the higher your yield and the safer you are over time. So it's a great asymmetric opportunity for like anyone in the market, especially those who don't like trading or gambling. So it's more like you are the market maker for them kind of thing. And generally, it's much more profitable to own the casino than being a player in the casino.
Yeah.
So that's a good thing about, being in CLP. I think that should do for a breakdown.
Yeah, no, it's interesting. I'm not sure how this is the first time we're streaming on X, so I'm not sure how comments work, or we do like a live Q&A session here. Um,
uh,
if someone knows how to ask us a question here, let us know. We can do a live Q&A, answer some questions. Maybe it's replies. I'm not sure. If anyone in the Discord community has a question, throw them in. Same thing with YouTube. But if you guys have questions, fire them out. It can be very interesting. And overall, I think this was a successful first X stream. This was good.
Yeah. I haven't checked like how many people are watching. I see on the Discord they say like close to like 260, 270 people.
Yeah.
So yeah, I think it's important to like extend our reach and stuff like that. But again, pro members have like more content, more like direct value and reports and stuff like that.
Yeah.
So
Yeah, absolutely. And I guess, look, if I can't find a way to get questions on X, or people don't ask questions on YouTube, we can kind of call this stream here. And I personally am going to hop on to Discord with the pro members right now for a few minutes, if you want to join me.
sure.
But
Let's do it.
yeah, everyone, thank you very much for watching. We really appreciate it. First stream on X, one of the very first on YouTube as well. And yeah, we do this every single week. And if you are interested in seeing what our picks are, our market analysis, market updates every week, then yeah, absolutely jump on and check out Crypto Pro. If you've got a large portfolio and you want to talk to us directly as a team, then reach out as well via DM. We are taking applications for our inner circle. But yeah, bro, thank you very much. I'll
Thank
see you
you.
on YouTube. See
Discord.
you
Yeah,
later.
yeah.
Yeah, see you on Discord.
See
See you
you. Bye.
later.